Hi guys, my name is Nicolette Mashile. I'm also known as the Financial Bunny. Welcome to the Financial Bunny TV. We're talking all things South Africa's parliament burning down. Guys, I cannot believe that parliament burned down. Like really, where is the security in that place that a person can literally walk in? Of course, there's rumors that this man has got military training and all sorts of intelligence and what. But for him to be able to gain access into parliament and be able to burn it down, that is something else. And I feel like there's something bigger than what we're seeing or led to believe about this entire story. But what is even more peculiar and more interesting is the fact that, first and foremost, the architect that designed the place is still alive and can still come and tell us how much it's going to cost to rebuild parliament. And that price tag is 1 billion rand. 1 billion rand of taxpayers' money needs to go in to rebuilding parliament building. I don't know. First and foremost, I don't know what the protocol is when it comes to insurance for government buildings, because either way, taxpayers were going to pay for it. The premium, I'm sure it would have been like millions of money every single month, or thousands rather of money every single month. But I just find it weird that they didn't have insurance. This thing is burnt down, and all of a sudden, taxpayers must now foot for parliament being rebuilt. And I'm just saying, you know what? They really can have their meetings outside under a tree for all I care. They can, like we used to do in the olden days, get outside in a kraal, get together as the different parties and have your conversations, because why do you not have insurance? And perhaps maybe there is some truth to it to say government buildings don't need insurance, but I don't know. Something sounds a little bit off about it. But let me tell you what I do like about this entire thing. It means that there is an opportunity perhaps to start the conversation about building parliament rather than being in Cape Town, making it in Pretoria, which is the political capital city anyway, Johannesburg, which is the hub of all businesses and corporate world in South Africa, or even take it to Nelspruit. I mean, geez, we need something. Bombela needs like a refresh and a whole new world of things happening down in Bombela or up in Polokwane. Just think about it. Rustenburg is also there. I mean, Mahikeng is also there. I mean, there's endless opportunity. But what's beautiful about it is that new year, new you, new everything. So you can really resurrect yourself. Speaking about the fact that Parliament does not have insurance, today I want to talk about the 3 different insurances you should consider if you are going to be buying a property. First one that you've got to consider, first and probably one of the most important ones, is insurance on the debt if you are going to be buying the property using bank financing, or for instance, an institution like SA Home Loans. If you're going to be using any type of creditor to be able to finance your house, one of the most important insurances that you need to get is insurance against that actual debt that you now have. Remember, debt is a liability. There is somebody that you need to pay every single month. So very important to make sure that that person is still taken care of in cases where you are unable to pay. For instance, if you have permanent disability and you no longer can work, you can still derive some sort of payment, or where you can no longer derive an income, you are still able to pay for this debt that you have, especially for something as big as a house. You don't want it to be repossessed because you're not getting an income, you can no longer pay for it, right? That's the first one. The second one is death. You know, people die and then unfortunately they die with an outstanding balance on their home loan, and then you sit with your estate not being able to pay for this house once your estate is actually wound up. Because one of the biggest things that happens when you die is they will wind up your estate, look at your asset versus your liabilities, and whatever money is in the estate, they will try to settle, especially a loan like a home loan first, because they want to make sure that your kids are not abruptly kicked out of a house that now needs to get repossessed. Housing is a very big issue in South Africa. Africa. So a lot of estate managers do try to settle those types of loans as quickly as possible first. So what is the insurance that you need? It's called bond insurance, right? So you can get bond insurance. The beautiful thing about it is that there is an alternative if you don't want to get bond insurance. And I'll tell you why I prefer the alternative versus the actual bond insurance. The alternative is that you get a life insurance and you cede a portion of your life insurance to the creditor that has given you this home loan. What does that mean? Let's say, for instance, you get an insurance, a life insurance of 5 million rand, right? Don't get too much insurance because you will be over-insured. And when the financial institutions start to look at your payout and they suspect that you tried to enrich yourself with insurance, you may also sit with problems. And you don't want to leave the people that are left behind to sit with this issue behind. So it's important that when you are getting insurance, get ample insurance, close enough to what your estate is actually worth, right? But let's talk a little bit about how do you cede your life insurance to a bond issuer. So as I said, let's say you take up 5 million rands worth of life insurance, and let's say your home loan is 2 million rand. But by the time you die, maybe you have an outstanding balance of 1.5 million. That 1.5 million would be what the insurance company will pay to the bond issuer to settle your house before they pay the balance to your beneficiaries. So you are ceding the outstanding balance on your home loan to the actual, you're ceding a portion of your life insurance to the bond issuer for the amount that is outstanding. So if you do maybe pass away, unfortunately, and you still have an outstanding balance on your home loan, the life insurance company will settle all of that with the bank. You don't have to worry about it. Your family doesn't have to worry about it. And then they will get the balance. So if it's, let's say, as I said, the example that I used, 1.5, they will still get 3.5 million rand, but they get the asset as part of what you leave them, right? So that is one way. The reason why I prefer ceding to a life insurance versus a bond insurance is that bond insurance, you will pay as long as you have an outstanding balance. The day you settle the outstanding balance, this whole thing goes away. Whereas with a life insurance, once you settle, using that example of 5 million and 1.5, once you settle that 1.5 and you are still alive, you will still get the 5 million rand, which is with your life insurance. So you just need to go back to your life insurer or life insurance assurer and say to them, look, I've settled the bond, so I no longer need to cede any portion of my life insurance. So then your life insurance becomes 5 million. If you die the next day, your families or your beneficiaries rather will get the full 5 million rand if it is paid out, of course, by the assurer. Now, the second insurance that you need to look into is what we call structural insurance. And usually it happens where you are buying a full title home, where it's your home and you are in charge of it, and your levy that you pay, whether it is in a sectional title scheme or a full title scheme, does not cover the structure of your house. That's when the bank will insist that you get structural insurance for in cases of things like acts of God, like thunder, like lightning, or the house catches fire. Because remember, this is an asset. So if you are still owing the bank, and think about it this way, if you're still owing the bank and your house burns down to ashes, it's going to be very difficult for you to pay for a house you don't have anymore, which is why they encourage people to get structural insurance so that if something like that happens, you can get your insurance, it pays out, your house gets built, and you still have a house that you are paying for at the bank. Because remember, the bank also has an interest in your house so long as there is still an outstanding balance on it. So that's quite an important one to get. Generally, if you are living in a sectional title, for instance, like myself, I've got a couple of apartments. Those apartments, I don't pay the bank structural insurance because it is covered in the sectional title scheme and it is coming from my levy that I pay. So the entire estate is kind of taken care of. So that because let's be fair, if my apartment is burning on the outside, trust me that the person below me is burning, the person above me is burning. It would be very crazy to expect my structural insurance to pay for mine, the one above and the one below, because it's my fault that maybe the fire has actually started, right? But what happens if something happens inside your house? For instance, if there's a break-in and somebody steals your TV, or if you flood your house and you incur some losses. That is the third type of insurance that you can look into. It's not always mandatory because really it's your things. You decide if you want that type of insurance, right? It's called household goods or household contents insurance. And basically it is an insurance that looks at what do you have in your house that is worth of a lot of value, that if you are to incur some sort of damage, it will hit your pocket very hard if you have to replace those things. So your television, for instance, I have like camera equipment in my house, your purse, your jewelry, all of those kind of things, your fridge. So it will be things like electrocution, when the lightning hits and then some of your appliances get fried up. So those types of things. Your garage door, for instance, I've included my garage door if it breaks down because it works on a motor. If it breaks down, that also would be part of the things that I would be able to claim from my insurance. I've also put, as I said, my camera equipment, my television, my purse, my bag, because I've got some designer brands that I have purchased. So all of those fall under household. My laptops also fall under household contents insurance. So those are the three types of insurances that you do need to consider. By the way, if you do live in a complex or sectional title scheme, some of them, if not the majority of them, also cover your geyser. So if your geyser bursts, because naturally these days with the new apartments, the geyser is actually on the outside. It's not inside your house in the roof anymore. It's mostly on the outside. If you go somewhere, you will see in the building that they've got like a little funnel, probably by the stairs where the geyser is. If you're living in a loft, it's probably on the outside of your loft. So generally the geyser is one of those things that is included in the structural insurance that you would be. So essentially, if your geyser bursts, find out from your estate manager if it's covered in your levy. If there's insurance for it, you will pay excess, obviously, but it's never a huge amount of money. I've had that happen to me like 3 or 4 times where tenants will say to me, "Oh, the geyser has burst." And then all I've got to do is to send a young email to the estate manager and say, "Hello, geyser has burst at number what," and then they'll send me the forms that I need to sign and but yeah, I hope that you guys, in light of this whole parliament debacle that's happening in South Africa, do go and check the insurances that you need on your properties.